Hey guys, what's up and welcome to a new Tesla update video. So today, as usual, let's go over the market. Let's talk about what just happened. Pretty much exactly what I said yesterday actually happened today already, which is great to see it. And yeah, we'll just go over it more, I guess, in depth, talk about it, discuss it, all that, usual good stuff. And yeah, as usual, also, if you guys enjoy the video, find them useful, helpful, informative, helps you cope, whatever the case may be, don't forget to hit that like button. Ladies and gentlemen, it does help a lot, of course. And on top of that, none of this is financial advice. Do your own research, make your own decisions. I am not a financial advisor, blah, blah, blah. So all that being said, Tesla ending the day up just under 5%, putting us at about $133.50 per share, which is pretty damn good compared to the market itself. You can see the market QQQ was up about 2.8%. So Tesla, definitely a little bit of an underperformance there compared to QQQ, but compared to SPY, an outperformance. So it's, depends on which way you want to look at it. But overall, Tesla, you can argue is performing more or less in line, let's just say, with the market. So what does this mean? Is this it? Is this the top? Are we, is it time to crash, or what is happening exactly? Let's talk about it. So, ladies and gentlemen, yesterday, you remember how I said that we're essentially potentially forming a cup and handle. The handle was being formed. And then, the fact that we were up pre-market yesterday because of Netflix, it means that it's a good sign that we can potentially get a nice rally off of that. Well, that's essentially what happened today. We got that nice, juicy 5% rally. Now, what does this mean though, right? So you can see, first and foremost, guys, on the 1 hour, really important to note is the fact that, so back when we went all the way, you have to keep in mind the RSI, again, I could be wrong. I'm like 99% sure though. The RSI's position is where the candle closed, not necessarily where the candle went to. So if of course that is true, which I believe it is, because this RSI candle, or this candle right here, more specifically actually, where we went up all the way to that 136, but the 1 hour candle actually ended up still coming down and closing at 132, which is higher than we currently are. Oh, sorry, we are higher than this current, where this candle closed back then, which was only a couple of days ago. The RSI still went all the way up to about 73, on the RSI, right? But we went higher and closed higher, most importantly, closed higher on this candle right here, the final candle of the day, than here, right? But even though we did close higher, the RSI is actually, not like crazy amount lower, but it's absolutely unquestionably lower, right? So that's an arguable bearish divergence setting up on Tesla. Now, the reason this is interesting is because this usually means that obviously we are coming to a short-term top, right? And on top of that, because of course we are in this rising wedge, and I've always said this before, these patterns, as they play out, they're bullish, but they usually end bearish. It's very rare for a rising wedge like this to somehow break to the upside and still go up even higher. That is not common. More often than not, what you do is you bounce up and zigzag upwards in it, and then ultimately you fall south from it. So for instance, something like this can happen maybe next week where we rally up to this, somewhere like this, and then fall, right? That is usually, not again, that's the thing with the market. It doesn't always have to happen this way. There's, of course, always going to be anomalies and exceptions to the rule. That is what makes the market unpredictable and makes it extremely difficult to trade in the market. But more often than not, that's usually the way these rising kind of wedges essentially play out, right? So just keep that in mind, guys. Very, very important to remember that. Now, I personally still believe that there's a decent chance we come up to, again, at the very least, like 136, 137, which is this level right here, maybe even as high as 140. I don't think we'll go much higher than that. I don't think we'll go to 150. I see a lot of people actually, screaming for 150 now. And that to me is starting to feel a little bit bearish. And the main reason I say that is because whenever people are starting to get excited and people are starting to, and I start seeing more people being like, yeah, 150 is Tesla, 160 is Tesla, yeah, let's go 150. That's when I start getting like, okay, let's hold on a bit. And I start reevaluating a little bit more. And I start, kind of questioning whether or not that's even going to happen. Again, it doesn't mean it won't, right? But, again, I like to kind of be more contradictory, where if everyone's bearish, I like to be a little bit bullish. If everyone's bullish, I like to be a little bit more bearish, right? Mainly because the market is, that's just kind of how the market goes, in all honesty. Like back when we were down here, all the bears were still screaming for 70, right? They're like 70, Tesla 70, 70, 70, 70. It's going straight to 70 from here. Now, I'm not saying it won't at some point, but the fact that they thought that even from here, it'll go straight to 70 from here, not, no rally, just straight further down another 30% or whatever. Come on, that's just ridiculous, right? So that's where you start getting a little bit bullish, and vice versa, right? So now that we're all the way in this rising wedge, and now we're starting to approach, in my opinion, major resistance on pretty much 140, let's just say. That's where I'm starting to get a little bit, more hesitant. And a lot of people are starting to get a little bit too happy and excited. So just keep that in mind. Just take it for what it's worth. Again, just a thought, right? Just thinking out loud over here. But with that being said, I am slowly, very slowly, but surely selling calls against my shares. As a hedge, if you want to know, I'm pretty much mainly selling in the 150s right now, about 155 for February 17th. This is the main ones I'm personally selling for right now. As a hedge, just as a hedge, straight up, mainly because I don't think that we will go that high, and I especially don't think we'll go straight up to that level either. I don't think we'll just rally up there. We absolutely could. I'm not saying it's impossible. I just don't think we will. And if we do, fantastic. I have substantially more I can just sell against it, and higher prices, of course, and just keep doing that if I need to, right? I'm just kind of, being a little bit cautious here. Not fully cautious, but a little bit cautious. However, all that being said and done, yeah, so like I said, we have the potential cup and handle with the handle that potentially played out off of this little rally right here, playing out right now, which again, in theory, this could essentially lead us up to the 150s actually. In theory, it could, based on the cup and handle, formation. But, with the major resistance right at this yellow line, I just don't think it will, especially with the 140-ish area also being resistance as well. And on top of that, we do have a bearish divergence setting up on the 1 hour. So I personally wouldn't be surprised if we do end up actually somewhat soon, maybe even after earnings, actually falling, especially if we rally into earnings. Usually a rally into earnings is a little bit more suspicious to me than a drop, I guess, into earnings, right? Also keep in mind today's volume was quite low, very low compared to pretty much for the last, I don't even know how long this is, like a month almost, right? Maybe not a month, but actually, yeah, about a month. Wow, it's been that long. What the hell? This is that long, really? That's crazy. Yeah, so about a month actually. This is the lowest volume we've had in about a month. So keep that in mind on a green day. It's just something else to consider. Now, all that being said, I want to make it very clear. The RSI on the daily is still looking quite good, right? The RSI on the daily is not looking bad at all. Still looking pretty decently healthy, arguably, actually. Definitely not a bearish looking RSI on the daily whatsoever. But just because it doesn't look bearish doesn't mean that we're not going to get drops. Just keep that in mind. I want you guys to I want to make that very, very clear. When everyone is, all pessimistic down here, I was trying to be more optimistic, and now everyone's trying to get, optimistic. I'm trying to be more realistic, you know what I mean? So, and I've said this before, again, I wouldn't be surprised if this rising wedge plays out to the downside, which it usually does. We fall back down. Let's say maybe even go back to as low as 100 again, just as an example, right? Maybe like 107 or something like that. What that to me is very bullish, and that's the reason is because, like I said yesterday, is I personally want to see a lower high set up somewhere on the RSI as the stock, even more ideally, actually makes a lower low. So again, if we come down to, let's say, 90 on Tesla, and the RSI, I'm like 99% sure we'll set up a higher low, which is of course a bullish divergence on a daily. That is fantastic news, and it'll be a massive bullish divergence. It'll be an extremely evident one, which is, in my opinion, even better. So just something to consider, but that's essentially what I'm seeing as of right now, right? Let's take a look at the 21 EMA, which we did actually close above the second time. Now we did over here, and we did have a massive rally, and then we're doing it again, which I wouldn't be surprised if we actually have Monday as a start to Monday on a green note. But either Tuesday or maybe in the second half of Monday, we actually get a pullback similar to what we had on this candle right here. So we maybe rally back up to this general area, and then most likely get a massive rejection again. That wouldn't surprise me at all. But of course, we'll see it as it actually happens, right? We're still well above, or well below rather, the 50 of the 200 is so high up we can't even see it. We're up above the 5 and the 10, which is great to see as well. And of course, we are pretty much approaching the green line of the Bollinger Band, which is why I also think we're approaching some major resistance here as well, because I don't think we're going to pass it. There's just too much resistance up here, in my opinion. Again, we'll see what happens, but there's, in my opinion, just a lot of resistance coming up around these levels right here, which will be very hard to just casually push through. And I also think that we are going to consolidate a little bit here for a few days at least, for sure, next week. So we'll see. But again, the main thing, the most important thing I'm personally looking at, and the thing that's catching my attention the most as of right now, are two things really. The yellow line, right, which I talked about several times, major resistance coming up, and of course, on top of that, the fact that we are in a rising wedge, which again, very often plays out to the downside. Extremely often plays out to the downside. You can even make an argument that this is just a massive bear flag. In all honesty, you absolutely could make an argument that this right here is just a bear flag. Just, again, I'm trying to be realistic. I know people are going to be like, oh, you're selling calls. That's why you want to be. Trust me. I still benefit a lot more from it going up than going down. I promise you that. But I'm trying to be realistic, and I'm trying to just tell you guys exactly what I see. Biases aside, whatever the case, just it is what it is, right? So that's kind of what I'm seeing as of right this very moment, ladies and gentlemen. So let me know what you think down below. The SPY, actually beautiful rally today. Pretty nice actual rally, but it is approaching, you can see major resistance here as well, because we had a lot of support back over here, which I will actually draw a line on. We had a lot of support right around this level where we bounced off several times, and now we're approaching it, bounced and starting to bounce and make it act as a resistance now. So just something else to consider. And this was actually one of the rare cases where this kind of situation here actually played out to the upside, because this to me right here could have been a situation where, you know, similar to what Tesla has, you know, plays out to the downside. It didn't, obviously, for the SPY. It actually played out to the upside, which is, like I said, it's not impossible. Things can always change, but more often than not, these do play out to the downside. So we'll see. Top of that, TSLQ does look a little bit bearish here as well, so it could potentially have a double bottom here and get a stronger bounce. But we'll see, of course. We'll see. This is also hard to say for sure. It's a very wonky looking chart, in all honesty. And the final thing, of course, is the VIX is obviously bouncing off of some pretty key areas, and it is setting higher lows while setting a higher high up here. So we're in quite an interesting situation, man. This market is definitely in a very interesting situation here. It's extremely hard to say for sure what'll happen, but, you know, at least for the short term, I do strongly believe Tesla has room to the downside, maybe like after earnings, honestly. That's just, I strongly believe it. It doesn't mean that it's going to collapse and go to 70 or something like that. It could. It absolutely could. Absolutely. I personally do think that this will play out to the downside, and I personally do think we'll probably come down to maybe like 113 or something like that after earnings. I don't think that's impossible. I definitely think that's absolutely in the cards, but that will gap fill, and that will essentially just simply play out this potential little arguable bear flag, which I showed you guys from back here. Or it could also arguably, well, the bear flag would actually go a lot lower. Actually, if you want to look at this as an actual bear flag, that will be pretty bearish. Like, unironically, quite bearish, because you can argue that the bear flag is something like this, and if we do break down under from there, that means Tesla can drop somewhere to like pretty much around the 70s. We'll see. Again, I don't want to make that claim. That's a pretty bearish. That's extremely bearish. I don't want to say that's going to happen, but it's not out of the cards. That is definitely something to consider still. However, the main thing I'm just looking at this as is just a rising wedge, which I definitely think can easily play out and gap fill down here at this 113 level. That definitely would not shock me. And if we do come down there, beautiful. I'll just sell more calls. No worries for me. But yeah, that's kind of what I'm seeing. Let me know what you think down below. Ladies and gentlemen, hope you guys have a fantastic weekend. Thank you all so much for watching. I'll see you guys on Monday. Peace.